Created with free version for non-commercial use.
You may change your mind. We'll see what happens. Kath, welcome.
Hi.
How you doing? You okay?
Yes, thanks, you.
Yeah, I'm very good, thank you. Been a very long day for me today. Very long day. How's your trading day been?
I've not done any. I've not had my internet for about the last 5 hours. It only came on about 40 minutes ago. So
You're with BT like me, right?
No, I'm with Virgin. It's usually brilliant, but then this afternoon it went off the whole street. Had no. Well, anyone who was with Virgin had no internet or TV or anything.
Just shows you nothing's perfect, right? Imagine you were stuck in a trade.
I know.
With no stop loss.
I know. That would be really bad.
That'd have been dangerous. At least we got our phones anyway. Okay, well, thanks for coming back. You're surviving. Day 3 we're at, so we'll continue pushing on.
Yeah.
So everybody welcome. For the members that are here today, we're just going to lead on from what we was looking at yesterday. I think repetition is very important, but I think what we're going to do today is go over some live markets. So we're going to be looking at some of the market structures that happened today, okay? So with regards to pushing forward, what I'd like to do is just have a little recap on some of these patterns. I don't want to make this long-winded, so we'll just run over some of the patterns that we looked at yesterday, and then we'll move on to some of the live charts. What we're going to be looking at today is using higher time frames to our advantage. Now, I know that sounds kind of sophisticated, or you could make that sound sophisticated, but the truth is, with the strategy we're using for the break and retest, we're going to be monitoring one major time frame, which is going to give us evidence of potential trading opportunities, and that's going to be the 4 hour time frame. So that's the time frame we're going to be using. Now, breaking that time frame down is, of course, going to be a different aspect to what we're discussing now. And as you guys know, you will start on your high time frames and then you'll move to your lower time frames, okay? I'm going to show you how to do this in a very simple way. Tomorrow, we was going to look over higher lows and lower highs in terms of market structure, higher lows and lower highs and double tops and double bottoms. But what we're going to do today is just reinforce what we learned from yesterday, and then we're going to go straight into entries tomorrow, which is going to be very exciting. So I hope you find it useful. Now, with regards to trading opportunities, I'm going to ask you a very important question after we do the recap. And then hopefully this will just really, solidify everything and bring everything that we've been learning together. Now, this session today is not going to be 1 hour and a half as we did as yesterday. There was a lot to discuss, so we're going to keep it very minimal. We'll go over a few charts. If there's something that you guys want to have a look at, then let me know, and then we'll have a look at that chart if that's what helps you to identify the discussion that we're going to be having today. So just for the recap, okay, again, same as we do most days, just jump in there, Ida, welcome, hello. Just like most days, just jump in there, give me the answer to the question in its simplest form, and then we'll move on to the live charts, which is obviously a little bit more exciting, okay? So looking at the recap, what we're going to do is just go over the patterns. With this formation, what are we looking at here, guys?
Uptrend.
Very good. In an uptrend and market, we're simply looking for
buys.
Thank you very much. With this pattern here, we have an uptrend in market, but what is this trend in market doing?
Respecting the
trend line.
Very good. So how do we take trades from a trend line retest market? How do we take the trade? We simply wait for price to do what?
Pull at the trend line to show. Find support at the trend line.
Very good. That's fine. Now, does price need to respect structure highs if it's making new higher highs? Is it
Not
allowed?
necessarily.
Very good. Okay. In this market pattern. So the third pattern that we're going to look at is this pattern here. We see price was pushing up extremely strong. And then what happened?
Have a break the counter trend line and retest.
The trend line was broken. Price came back and found some sort of resistance at a structure level here, and then continued to push to the downside. Now, what is this price pattern indicating to us?
A reversal.
Very good, thank you. This is a range of market prices bouncing off the roof and off the floor. What kind of trades are we looking with this structure pattern?
Breakouts.
Breakouts. So when we say breakouts, we know we're doing a break and retest strategy. We're looking for breakouts from which side?
Either.
Break a resistance to buy and break a support to sell.
Yeah.
Very good. Okay. Now, when we look at this price pattern here, I mean, I think this is the most prettiest looking pattern, to be honest with you. I don't know if it's just my drawing or just the fact that it is what it is, but we see price was pushing down. It found some sort of support at some level. And then what do we see price? What happened with the price here?
Fails to make a double bottom.
It failed to make a double bottom. Now, when we're looking at double bottoms, we're looking at an indication of a potential reversal in the market. How do we trade this? Well, if price gives us confirmation that it's creating new forms of support, that is obviously an indication of a 4-hour candle close. Then we could potentially look for a buying opportunity at this level. If we don't find that sort of confirmation, and as you'd call it, probably a signal, then what are we waiting for as a next step to look for a buying opportunity?
Take out structure high.
Very good. So we're looking for price to take out structure high. In this instance, we have price taking out structure high. Now, we don't know if there's a retest here. Let's just pretend there was one, and that's where we look for a buying opportunity. If it doesn't happen here, then we just wait for price to pull back at this level and then indicate a retest at the structure level. This price pattern here, we have a double bottom. This double bottom is an indication of what?
A reversal.
Very good, thank you. A double top is an indication of price reversal. Here we have a missed double top, which is a potential indication of price reversal. Price is making new structure lows, so price is stepping down. If we find a sell opportunity, we could take it here. If not, we just wait for structure lows to be broken. Here we have price respecting its trend line. This is a retest of the trend line, a retest of the trend line, and a retest of the trend line. This was supposed to look a bit more prettier. However, it doesn't, but it doesn't matter. This is price trending down, breaking structure levels, and then coming back for a retest of that structure level for continuation to the downside, okay? And then our final example here is a trend line down, a break of this trend line, and then a retest of structure lows and a continuation to the upside. With this pattern, what are we looking for? Buying opportunities, and then the confirm of the retest is potential signs of a what?
Reversal.
Very good. Okay, fine. So I think you guys have picked up your patterns very quickly in terms of what we're looking at with regards to market structure. Now, quick question for you. For those looking at their charts today, did you find any sort of resemblance in what you've been learning? And has your perspective of the market changed slightly from how you're looking at it based on what you've learned in the last couple of days?
Yes.
Yes. Okay, so we have one person saying yes. Anybody else?
I haven't been on a chart today, sorry. So
No, I know you haven't. That's absolutely fine, no problem. Okay, well, hopefully by the end of the week, somebody was able to jump on the chart and find some sort of resemblance. If not, then we might have to run this course again. Let's see what happens. So what we'll do now is we'll jump on to the actual live charts, okay? And we'll try and identify some of these patterns that we've been looking at. Now, of course, this requires just a little bit of your help, okay? I'll do my best to run through as many charts as we can. And then what we'll do is get you guys to answer some questions, okay? So first and foremost, anybody here have a pair they'd like to shout out to us that they've looked at and identified these kind of patterns with that you'd like to look at today?
Gold and Pound JPY has double tops right now on the 15-minute, but based off of a 4-hour setup.
Okay. So we've got a double top on the 15-minute chart based on the 4-hour setup. Is this correct?
Yeah.
Okay, very good. So looking at this market structure, you're saying that we're looking for sell opportunities at this moment in time. Is this what you're saying?
Yes.
Okay, fine. So breaking down this market structure, what do you see here at this moment in time?
I was looking at most recent. It was stepping down, making lower lows and lower highs. There was consolidation, right? If you go a bit further back,
Okay.
and the market broke out of consolidation and is now back up at what was support to potentially become resistance now.
Okay, fine. So that's really good to hear, because when I look at this market on the 4-hour time frame, this is exactly what I see. So for me, using my higher time frames to my advantage is simply seeing, first and foremost, one thing. Price was moving sideways. Okay? In this sideways market, I know now that I'm looking for a potential breakout to the high, a pullback to a structure support, and a continuation to the upside. If this doesn't happen, then I'm looking for a price to push down, break out of the range of market, pull back to structure support, term resistance, and then continuation to the downside. And why do I know this? Because if we have a sideways moving market, then simply that's what I'm looking for. Okay? So when I try and divide this chart up, I don't care about all this information to the left. I'm looking at current price action. So how do I draw this if I'm looking at this chart? Well, what I'm doing is I'm taking a line and I'm drawing it in this manner. I'm taking a line and I'm drawing it in this manner. Okay? This is how I'm drawing my chart. Now, what I'll then start to do is start to identify where price is respecting and where price is violating. In this instance, I can see prices respecting this roof, and then to the downside, I can see prices respecting the structure lows or the floor, whatever you want to call it, okay? Now, in this instance, what I know is that price could do one or two things, which is break up or break down, okay? So next thing I'm going to do is obviously be open-minded in the situation. Now, just as I believe it was Jason that mentioned this, price in this consolidation started to step down, okay? So here we have a structure high, here we have a structure high, and then here we have a structure high, okay? Now, what we can see with this pattern is price is stepping down, okay? Now, if price is doing this, more often than not, my inclination would be to look for potential breaks of structure lows and then retest for selling opportunities. And in this instance, this happened. Does this make sense to you guys, what I'm trying to illustrate?
Yeah.
Okay. So now that we have a bias of what price is doing, what we simply do is drop down to our lower time frames to look for more confirmation of this price action, okay? So if we draw our levels here, no. We'll have to draw our levels using a proper. There you go, that will work. So let's draw this here. And then let's draw this here. Okay. Fine. And then price started to step down. And then here, step down. Okay, fine. So let's drop down to our hourly time frame. Now, one thing I want you guys to start to do, okay, is once you've drawn your levels on the 4-hour time frame, I do not want you to alter them, okay? What I want you to start to recognize is that on the lower time frames, you'll start to see patterns that look like what? Based on our structure levels, what does this look like? Here.
A false breakout.
Yeah, okay. Now, you're going to start to love these false breakouts, okay, using the break and retest strategy, because this happens all of the time. If you guys haven't rushed the course and have waited for me patiently to go through this, you will find that this pattern that you're seeing, which is a false breakout, is going to become your best friend, okay? Because now, when we look at price action as we have identified that we are looking for potential what?
So
Oh,
Right. Even though we're in a consolidated market, why? Because we know price is stepping down, okay? Now, based on the fact that we've made our bias that we're looking for sells, if price starts to break out of this structure, or even here break out of this structure, are we really phased by it? Should this affect us?
No.
no.
It shouldn't. No. So what we're going to do is we're going to stick to our guns and accept the fact that we're still looking for sells, okay? And then when a selling opportunity arises, we can then enter the market. Now, on this pair, based on this 4-hour structure, this 4-hour structure, and then this being a third confirmation, do you think we could have got into a sell opportunity here or a sell opportunity here?
Yeah.
We could have. Now, I know that's taken a lot to piece the puzzle together, but it happens every single time, okay? Now, if we're to use this opportunity and we just take current price here, I mean, this is GJ, so it's just a ridiculous pair. This range of this potential opportunity after 2 confirmations, let's just say, for argument's sake, is 100 pips. Do you think you could have found 20 to 30 pips within that range?
Yeah.
Yeah.
Okay.
Yeah.
This example here, which may not look huge, but using this as our 4-hour structure, this range being 55 pips, do you think we could have found 20 to 30 pips within this range to look for a trading opportunity?
Yeah.
Okay. Now, when you guys start to learn how we enter the market, the fact that price breaks our 4-hour structures is a beautiful thing. Okay, it's a beautiful thing on a 1 hour 30-minute chart, because when price comes into this area, this could potentially mean that price is trying to push to the upside, right? Even though we're in a sell bias market. Does everybody understand what I'm trying to illustrate?
Yeah.
This could potentially mean price is trying to push to the upside because it's breaking 4-hour structure. But if price fails to continue pushing up and then turns around, what does it indicate to us as a sell bias, as we've already made our bias for sells? What could that potentially indicate to us?
Sellers are in control.
Price is doing what?
The sellers are in control still.
Very good.
Yeah.
And when do we want to enter the market?
At the retest.
Okay, yeah. That's the obvious answer. We want to enter the market when there's a retest. But do we want to enter the market where there's no volume or momentum? Or do we want to get in the market when there's momentum?
Momentum.
When there's no-
Very good. So this is one thing I'm going to show you guys tomorrow, how we enter the market on this information. So if you've ever looked at my Instagram or looked at my charts, you might see me entering a market and my entry level would be around here, here, and then my stop loss would be above here. And if you're not familiar to what I'm teaching or the comprehension of what I'm trying to explain, then you might say to yourself, well, this structure broke. How did you know it's going to be a sell? Well, we've already made our minds up that we're in a sell bias market based on the fact that price is stepping down. So all of this noise, I'm ignoring and just waiting for price to either continue to push down. Now, what's going to change my mind with regards to a sell bias market? If price breaks a structure high, what's going to change my mind?
If it breaks the structure high, the previous high from before.
Right. So if we have a 4-hour structure, this price has been broken. What's going to confirm that I potentially may now look for buys as opposed to sells?
Or it pull back and hold at that area as support and then go.
Very good. For price to pull back, hold at this level, and then continue to push to the upside. You can either look for exhaustion on the 4-hour time frame or a break of this structure high and a continuation up. Does this make sense?
Yes. Mhm.
Okay, very good. So now, when we look at our charts, I want you guys to understand one thing. All the structures that I've been showing you as of yesterday and Monday, they may not look as perfect as you want. Here we have a range in market. Here we also have a strong pushing down market. Here we have price breaking this strong push to the downside. We have a range in market, price is not breaking structure highs. But what we see at current price is that pulling everything together, price is not breaking or retesting the structure highs. Now we can see it starting to push down, and then we can see price breaking this structure and coming back to it. Now, this looks nothing like what you learned yesterday in terms of a perfect setup, but can you see how we're trying to pull everything together to identify possible trading opportunities?
Yeah.
Okay, so let's break this down even just a little bit more, okay? So now we know with this structure, price was pushing down, okay? It broke this structure and then came back and found some sort of support. Now, this is an indication that price is potentially doing what?
Gonna go up.
Gonna go up. Now, what happens is price pushes to the upside and starts to give us rejection. So now we have this structure here. Okay, we don't know it's ranging just yet. So what we're waiting for is for price to confirm one or two things. Price now, in order to continue up, must break the structure high, come back for a retest, and continue to push to the upside. Does this make sense?
Yeah.
Right. Now, if price pushes down and fails to come to the downside and make a double bottom, this pattern now turns into what we call our first indication of a structure low, and now price missing the double bottom and creating a new structure high. Does this make sense?
Yeah.
Yeah.
Yeah. So now that price is not breaking structured lows, we can now look for buy opportunities within this pattern. Okay. And as long as price does not manage to break structured lows, we can continue to look for buy opportunities, but we must wait for confirmation. And as I told you at the start of the week, our confirmation will always be wicks and, of course, engulfing candle turning to support. Okay, so in this instance, we have a strong red candle here, and here we have a strong red candle, but we failed to break support. We now have wicks, which is an indication, as long as price is not breaking structure lows, that we're potentially going to continue to push to the upside. I know it's a bit advanced, but do you understand how we're trying to piece this puzzle together?
Yeah.
You do. Okay. Let's look at another pair. Let's get away from this one. And let's move on to something else. This pair is pound yen. Let's have a look at the pound dollar, okay? If the structure is pretty similar, we'll move away. Okay, no, this is fine. So, looking at the structure as it is immediately, what do we look for at this moment in time?
No te preocupes, te he dicho que
Okay, sorry about that. So looking at this market structure, what are we looking potentially to take with this pair?
Sells.
Very good. So the reason why we're going to say sells is because price looks like it's pushing down immediately, okay? Now, if we start to try and piece this puzzle together, what can we see? Well, let's figure this out. We don't know just yet. If we draw charts like this, then we can see price is respecting the trend line, trend line, trend line, trend line, trend line. Okay, fine. So now this could potentially be a trend line retest, okay? Now, this is obviously a first confluence or potential confluence of looking for sell opportunities. What do we also know? Well, we can see that in this instance, price at one point was not able to break these structure highs, okay? Price then started to push down, and we call this a stepping down formation, okay? Now, when we look at the stepping down formation, we can see that price was never able to really break its structure highs. So now, when we look at this, we're sell bias. So the question is, how do we get into this market? Well, the first indication of potential selling opportunities, especially on the 4-hour time frame, is wicks. Okay, and in this instance, we're not looking for pin bars or kangaroo tails or any of that lark. We're just simply looking for one thing. What is that one thing?
Rejection.
It's called it rejection, but why do we have rejection? Because of one thing. Price has to push, and then it begins with an E.
Exhaust.
Exhaust, exactly. Now, we can see that these candles attempted to push to the upside, but unfortunately, there was just not enough oomph in the market to continue pushing it up. Here we have another example of price trying to push to the upside, okay? Price was not able to continue to push to the upside because it exhausted. Now, I know you guys are going to say to me, well, this is price action. It's already happened already. So, you know, it's easy to say, well, yeah, you're absolutely right. But if we start trying to pull the puzzle together, price failed to break the structure high, failed to continue to break this structure high, and then this is a 4-hour candle, started to exhaust, attempted to break again and failed to exhaust. In these 3 candles here, we have 12 hours worth of price action. If you see price starting to exhaust here, do you not think that we could look for a potential break of this structure level for a sell opportunity? Well, you're absolutely right. Let's have a look at this. If I draw this level here, based on 1, 2, 3 confluences, price stepping down, and if you want to draw your trend line, you can we take a sell opportunity based off of this break? Well, let's have a look at this. If we go to the 1 hour time frame, what do we see? Remember, we're never going to change our 4-hour structure levels, okay? We've already decided that we're in a sell bias market. So looking at this structure, we're looking for sells only, okay? So price came up, gave us this kind of exhaustion. Now it created a form of support, okay? Now, once price creates a form of support, this now indicates to us a new structure level what?
Low.
Low. Okay. If this is our new structure level high, once price comes back to this level, do you think we can look for a sell opportunity?
Yes.
Yeah.
Very good. Now, if we're to get into the sell opportunity, we may not be able to get in at the top, but we're not really necessarily looking to get at the top. We're looking to enter the market after it's exhausted, and then price is moving in what?
In a downward momentum.
Very good, downward momentum. So if I was to enter this market here with, let's just say, a 10 pip stop loss. Let's draw this. A 10 pip stop loss, and then a 1, 2, 3 on the trade. So let's just go here. Would I have won this trade?
Yeah.
Yes.
Yeah. Now, I know this looks kind of messy to you because, you know, we're used to seeing things line up according to how we want. This is your 4-hour structure level, okay? And price has violated this level, okay? So immediately you might start to say to yourself, if you're monitoring the 1 hour time frame, I'm looking for buys now, especially when price comes back and finds a support level. But the only time we're necessarily going to be looking for buy opportunities is until price has broken the 4-hour structure highs and come back for a retest. So there's no rush to change our bias. Now, the reason why we have liquidity pullbacks is in order to help push the market in the intended direction that institutions want. Okay, so all we want to be able to do is not enter at the top because we don't care about that crap. The truth is, if we're in a sell bias market and we take a sell, we're only expecting the market to do what?
Go down.
Go down. If we're wrong in our bias of the market going down, we get stopped out. But what happens is we escape being in a market of the price reversing on us and continuing to push in the opposite direction. And of course, us losing big money by holding our trades and being wrong and strong. what we do is we just accept the loss and we move on until another potential opportunity arises, okay? And now based on the hourly time frame, this gives us enough confirmation that price may potentially reject based on the fact that we're in a sell bias market. This is our 4-hour level, and all we're simply waiting for is for price to find momentum and push down. All we're looking for is for price to go down, okay? And I know this looks messy, but based on the 4-hour time frame, this is what it's telling us. Does this make sense?
Yeah.
Okay. You look at this chart and you say it's really messy. Okay, I understand. Forget about all this price action, this support, this resistance, this support, whatever you want to draw. Just stick to what we've already identified on the higher time frames, okay? And then base your trading opportunities on that. All you're looking to do is for price to find momentum and push down. Tomorrow we'll look at entries. Let's look at another chart. Let's go off of USD CAD. Let's go to EJ, okay? Oh, wow. Okay. Now, if you've been with me for the last couple of days, you probably have been looking at this pattern with me, which is this channel line. Does anybody recognize it from what we've done the last few days? Now, what we can see now is price has now broken this channel, okay? Now, does this channel to the upside make any difference to a ranging or consolidating market which looks like this?
No.
It's not. Exactly. And the reason why it's not is because price is simply doing what? Just ranging between two levels. Okay? So we're not going to start saying, well, this is an upward triangle, and if you do all of this, then price should break this, and I don't know, man, whatever it is. But you know what I'm saying? The simple truth is price is moving sideways. But it's just moving sideways in more of an upward manner. Okay? So when we look at this market structure, what are we looking for price to do?
Breakout or breakdown.
Thank you very much. Okay. So looking at this market structure, the reason why we haven't drawn it like this is because we want to find areas on the chart where price is respecting the most. Respecting here, here, and so on and so forth. Okay. So this is an indication that this range of market is moving between these two market structures. So now all we're simply waiting for is for price to break to the upside, come back and show signs of rejection to look for a potential push to the upside, or for price to break this structure and come back for a potential retest of this structure level and continue down. Now, we're going to have many false breakouts with this strategy. But what's going to save us from entering the market in a sell opportunity? If you're looking at this right now, does anybody know?
Retest didn't hold, it just broke through.
Very good. A clear retest of this market structure and a hold. Now, remember, we only enter the market when the market's in momentum. So if you see price breaking this structure and then coming back with this candle for a retest, the only time you're going to enter this market is when price is in momentum, okay? And then once price is in momentum, you can enter the market. We'll learn that tomorrow. In this instance, we may have or may not have, but I'm not here to get too nitty gritty. The point is we'll just wait for a clear opportunity. So now what we can see is price is now broken the structure level, okay? Now it's pulled back to this level. Now this is a 4-hour rejection, okay? Now, I know this is not the pin bar or the kangaroo tail that you want to see, but what we know based off this market structure is that price has now broken this channel and come back to areas of resistance, okay? Can everybody identify what I'm trying to illustrate here with regards to this pattern?
Yeah.
Okay.
Yeah.
Now, just because price has come back to this level, does this mean we have a sell opportunity? Well, we don't know, okay? We don't know. But what we do know based on the structure is that it has broken its channel. So how do we look for potential opportunities? Well, we just jump into our lower time frames, okay? Oh God, I keep doing this bollocks. Just bear with me a second. Let me use this instead. Okay, that will do for now. Okay, so now we drop down to our hourly time frame. Now, I'm not going to move my drawing, my structure resistance. I'm just going to leave it where it's at, okay? So now what I know, based on the 4-hour time frame, is that the structure range has been broken. This is probably my strongest level of support, and now I can see prices come back to this resistance. Now, once price comes back to this resistance, I told you we're going to have many occasions where price is going to create a false breakout. So for me personally, while price is up and in this level, I'm really excited, really am. Because what I do know, being a strong level of support in the past, if price is supposed to do what we've been taught, which is turn support, turn resistance, then what potentially will this price do?
Reject.
Move down.
Reject, and then do what?
Fall.
Fall.
Move down.
So now, for me personally, my break and retest is obviously going to be this information here, okay? But for me to enter this market, all I want to see now is price to start to push down and break structure level lows, okay? And once price is able to indicate exhaustion and start to push down, then that's when I can look to enter the market, okay? So while it's hovering around here, the more 1-hour candles of rejection, the better for me, but I'm not looking to take any sort of sales yet. I now simply will wait for an opportunity for price to break this structure level and then enter the market. Why? Because we put our bias together based on the price action on the 4-hour time frame. Does this make sense?
Yeah.
It does. I know it goes against everything you probably know, but I promise you, if you can just trust me with what I'm teaching you, regardless of how messy it may look on the hourly time frame, if you just wait now, okay, not saying it will happen, but if you just wait now for price to start rejecting this level and then pick up momentum and volume and look to enter the market around here, here, and here, then you can look for a sell opportunity. And as you guys will learn tomorrow, the most important thing in entering this market is what? What would you say the most important reason to enter this market is?
Stop loss.
Very good. If you can find a stop loss of 10 to 15 pips, which we work with, so in this instance, this will be 13 pips, and then a potential reward, which is more than 1 to 2, do you think this is a good investment of your money?
Yeah.
Yeah. Does it matter if you lose this trade?
No.
No.
Because the more you repeat this process, the more likely you're going to win your trades, okay? If you lose this now with a 1 to 4 risk to reward ratio and you lose your next trade, so now you've lost 2, and then you lose your next trade, now you've lost 3. If you win your 4th trade and you've lost 3 in a row, with this risk to reward ratio and a good return of investment, ROI, guess what? You're profitable. If you lose 1 trade and then lose a 2nd trade and a 3rd trade and a 4th trade with a risk to reward ratio of 1 to 4 in this instance, and you win your 5th trade, guess what? You break even. Of course, minus your swap and your commission, but you're not going to be broke. But based on previous price action and history, tells us that these patterns work a lot. Okay? They work a lot. So for you to lose 4 in a row is very unlikely. But the only way you're going to get a good return off your investment is by entering these patterns when you see them and when the opportunity arises. Okay? And this is why you need to be very disciplined in your approach to the market in terms of the times you trade, the days you trade, and of course when you trade. Okay? That just combines what I just said together. I just sounded smart, but of course it's important when you enter the market. Okay? And you guys have to learn to do this consistently and regularly. And when you're able to do that, then that's when you're going to start finding rewards in the market. You can't expect the market to reward you if you're not willing to put in the effort, okay? The market's not yet a crazy enough place to reward those that are not willing to work hard. It's as simple as that. So now, of course, as much as this looks very sexy to enter into the market, once price starts to push down, will I enter the market? Well, no, not necessarily. Why? Because I only trade between 10 a.m. GMT time, that's 2 hours after London Open, up till about 2 p.m. or 3 p.m. after New York's Open. Why do I do that? Well, that's where I find my most success. That's where I'm most comfortable. After I've traded within those hours, I can just move on, enjoy my time with my family, and that's the life I've chosen to live. If you guys are, I don't know, want to sit up through London, New York, and Asia and trade this opportunity, then you can. But then expect that if you're now going to potentially trade this market, what kind of volume are you going to get in if you go in this trade? Do you think you're going to have as much volume as you would with London or New York sessions?
No, it's low volume.
It's going to be some low volume. Okay. That does not mean that price will not push down. It just means that you might have more of a heart attack waiting for price to finish moving sideways before it does decide to push down, okay? So just choose your times wisely. So I hope that illustrates that point there. I will be looking out for this trade, so I won't clear it actually. Let's have a look at another trade. Does anybody else want to have a look at another pair that they've identified? Oh, somebody said gold. Let's have a look at gold, okay? So with this gold, what bias of gold?
Oh.
Hold on. Oh, somebody's got a little kitty.
That was me.
Jason. Okay. So, Jason, I think it was you that mentioned gold, right?
Yeah.
Okay. So tell me what you see here, my friend.
All right. So gold was making higher highs and higher lows, but with this one, I'm more looking at the daily to get the areas, the resistance area. Yeah. So it was more of a back to this high area here. Yeah. A double top. We have, if we draw a trend line, we have a break of a trend line, a push bearish, pull back, and we back up to that area again.
Okay. So when you say we have a break of our trend line, are we looking at
No,
this
one,
structure here?
not that one, no. From before, with the push, the last bullish, yeah.
Here.
Yeah.
Okay. So you see on the daily a push from the bulls to the upside. Then we see price come, fail to continue to push up.
Mm-hmm.
Then we see price pushing back down. Let's draw this bigger because this is daily now, right?
Yeah.
And then it came back for a double top.
Yeah.
Okay, very good. So now at this level, we're looking for sell opportunities. I mean, this is a very pretty pattern. I don't like personally working with the daily, but I can see where you're coming from with this pattern here. So now, how do we use this time frame to our advantage?
We then go to the 4 hour and do what we would have normally done on the 1 hour. Well, that's how I use it because I'm on the daily.
Okay, yeah, that's correct. So just to point out to you guys, just so that you don't get confused, if you are going to trade this strategy, it's very versatile, okay? It's very versatile. If you want to use it on any time frame you want, just use two time frames lower, okay? So if you use a daily as your main time frame, then you're going to use the 4 hour and the 1 hour. If you're going to use the 4 hours your main, you're going to use the 1 hour 30 minute. If you're going to use the 1 hour, then you're going to use the 30 and the 50 minute, okay? And then so on and so forth, okay? So, Jason, if you can carry on illustrating this to us, please. So now we've got our analysis off of the daily. We're now looking at our 4 hour time frame.
Right. So then that means my bias is sell.
Very good, yes.
So what I wanted to do, I see we have a push. These are 4 hour candles, as they say. So we have like a structure low with the most recent area there. So my bias is a sell once we break that structure. Yeah, right there.
Yeah.
Once we break that structure, I want to be selling, and we could set up the same way that you were just doing. Because it's the daily though coming down. Like I personally won't do a 10 pip stop here. I might quicker do a stop above the U-turn, which could be a high right there, and then go to 1 to 3 or 1 to 2, depending on where the next areas are.
Yeah. That's beautiful. Okay, yeah. Now, one thing I'm trying to illustrate to you guys is that we've used the daily time frame here in this instance to look for what based on this pattern or this market structure. Somebody else sells. Okay. So now we're sell bias. Okay. Why? Because we had this push to the upside. Price broke this trend line. Okay. And now based on the daily time frame, probably just a tiny bit more confusing because we're using the daily, prices come back and failed to break the structure high. Now, let's hone in just a little bit on what we're seeing here. This is a 4-hour time frame. We now have a bullish candle. And if you remember, guys, I said we're going to use engulfing candles, but in reverse. We have a bullish candle pushing into what?
Resistance.
A resistance level. Price has failed to break this level. This is 1 hour, 4 hours worth of information, which is 4 hours, 4 1-hour candles and 8 30-minute candles. Now, if this is the case, what we can start to look for is sell opportunities at this level. In this example, because Jason's obviously using the daily time frame, it doesn't kind of, what's the word? Because Jason is using the daily time frame, he may not be looking for a sell opportunity at this level. Okay, he now probably is going to be looking for the structured lows to be broken, where we see some sort of support, or even more so for him is for these structure lows to be broken for continuation down to either these structure levels here or these structure lows here. Okay, but for us, if we're looking at this, we're only looking for, let's say, 20 to 30 pips. How we identify and use this time frame to our advantage is by jumping down to the lower time frames. And I promise you guys, you're going to love the 30-minute time frame. Okay, you really will. This is our structure level of resistance on what time frame?
30 minute.
Daily and 4 hour.
Oh, sorry, the daily. Sorry.
It's the daily, right? So now, regardless of what price does here, all we're concerned about at this moment in time on this day is a structure level. Once we see price start to break this structure level, as retail traders who are not too experienced, it's going to start to recognize this level as either a potential buy opportunity because price has broken this 4-hour structure, or using the strategy you're learning, we're going to view this as a what?
False breakout.
Very good. So how do we enter the market? Do we enter the market as soon as price comes to this daily resistance?
No.
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 All we're going to wait for price to do is either break structure level lows, okay? And how do we enter the market? Well, we have to find a stop loss. So let's see if we can get a trade. This is 10 pips. So this is 10 pips. This is our 4-hour structure. Once price starts to break the structure level, price is now obviously way above our stop loss range. All we're now waiting for price to do is what? Find momentum and continue to push to the downside. If we took a 1 to 3 on this trade, do you think we would have gotten this trade? Well, let's be honest with ourselves. Let's move this over here. Okay. So let's clear the drawings. Say as an example, this was our first entry. We may have got triggered into the trade. We probably would have lost this trade. Okay, fair enough. If we decided to view this as a false breakout and entered the market again, did we win? No, we probably would have lost this trade, okay? If we entered a third time into the market, we've now lost twice. We would have got triggered into the trade around this area, and then price never came back to stop us out, but took the win. So we've now lost 2 trades in a row, but won 1. Was we profitable?
Yes.
Yeah.
Okay. Now, nobody wants to lose trades, but it happens. And I'm not saying this is how you would enter the market, because this probably would have been our first sign that what daily structure is holding. Okay. So now we are waiting for a second confirmation to show that price is entering. So even if we lost this trade based on our knowledge of a false breakout, okay, we would have entered a second time into this market. So we'd have only lost once, and we would have won a second time, which means we would have made 3 times our investment, replaced one loss, and then made 2 times our investment. Does this make sense?
Yeah.
Yeah.
Okay. Now, I'm not saying you'll go for 1 to 3. On gold, you can go for a lot more. And there are some phenomenal traders in here, i.e. Patrick, who's one of the mentors, Dan, who's known as Picasso. These guys are phenomenal traders in terms of risk-reward ratio, okay? I'm not saying every single time you might have to enter the market twice. You may be able to enter it once and win. But the point is, never get shaken up, okay, based on all of this noise here. As long as your daily or your 4-hour time frame, well, in Jason's instance, we'll say daily. And what I'm trying to teach you, we'll say 4-hour. Follow what your 4-hour time frame says, okay? Just because you lost, it doesn't mean you look for buys. You now are waiting for price to either violate structure highs, to come back for a retest, and then a continuation to look for buys. And that's the only time you're going to be changing your bias. Does this make sense?
Yeah.
Yeah.
Okay, very good.
Can I add something, bro?
Yes, please do, brother. This is Dan, and as you probably know, guys, this is Picasso, okay?
Hi.
Yeah.
Sometimes when you enter to trade and you put, tight stop loss, a lot of time you are stopped out.
Yes.
And it makes you to change decision, but it's not right. If you decided from the 4-hour chart that you're gonna take short, sometimes you may stop out. It happened. It happened a lot of time, but don't change your decision because you lose. Because a lot of time you're gonna stop out, and then you're gonna see the trade going down, and you're gonna say, "Shit, how did I lose it?" So that's it.
That's very true. And if those who are with me recently may have seen what trade was it? Man, you've probably seen it on a lot of my trades, okay? Now, if I had used this as my first sign of potential rejection and price pushed down this deep into the market, do you think I would have lost this trade? Honestly.
No.
No. What would I potentially would have done with this trade?
Maybe break even most days.
Very good. So I would accept a break-even trade. Now, God's honest truth, if this is about 2 to 3 pips away from the market and I started to see it pushing up slightly, I would have taken my profits.
Yeah.
Yeah, I just would have. I don't care what anybody says about taking profits too early. The point is, as long as you do not let your losses run and you're strict with your stop loss, and you're taking more than 1 to 1 or 1 to 2 on your trades, you will make money in the market, period. Okay? Now, if my stop loss is 10 pips and it started to push down and I started to take profits here, this is 21 pips. I'm now plus 1 to 2. Okay? And this is even after a small rejection. Now, the thing is, why can I do that? Well, not because I know this is going to reverse and continue to push up, just that I fear losing 21 pips and then potentially losing another 30 pips. Like, that's just daylight robbery in my eyes. Do you understand?
Yeah.
My investment in this trade has now been, let me find the entry and be very honest with this. First.
I actually took this trade this morning, Rox.
You did?
On the break though of you see where you have the arrow going to the right at the bottom there?
Yeah.
The break at that low. Those lows, yeah.
These lows here?
No, down, go down. Next
Yeah.
one. Yeah. Yeah.
And you won the trade?
Yeah, because I had this stop. I put my stop above that old return there and then it went down.
I love it. I love it. I love it. Well done, brother. Okay. Sorry, man. I just got a bit excited. Okay. So this is my first sign. Price pushes up into this level, pushes down. Okay, so God's honest truth on this trade, if I'm being very honest with myself, I would have got stopped out break even on this candle. I'd have got stopped out break even on this candle. Price then pushed up, came back, so I would have got triggered again. I would have stayed in this trade, and then price pushed down. Okay, so this was target to the downside. 5 pips, no, I wouldn't have taken profit probably, so I'd have waited. If I start to see price reject it, pushing back, 1 or 2 things would have happened. This is 17 pips. Okay, so I would have either taken profits here at this level, or I would have gone break even on this trade. Okay, so now I would have had 1 break even trade. I would have had small, I don't know, 7-8 pips push, 7-8 pips profit here, because I would have taken out after this rejection. And then I would have patiently wait for price to come back into this level and then push back down. In this instance, I would have gone again, probably take profit or break even. At break even, I wouldn't have got stopped out. I doubt it. I'd manually press my stop. So if this came further like into this level, I probably would have taken the trade out, and then price continued to push down. The point is, just as Picasso made, just bear with me 1 second. Dan made, which we know as Picasso. If you have your buys from the higher time frames and you're using small stop losses, you potentially will either break even more often than not, or potentially lose a trade. But do not change your bias, okay, until the higher time frames give you tell you otherwise. Does this make sense?
Yes.
Yeah.
It does. Okay. Was somebody about to say something?
No.
Okay, fine, no problem. So what we're going to do, okay, we'll look at one more chart and then we'll leave it there. What I want you guys to take away from this, okay, is that 4-hour time frame trumps, okay? It trumps. How you decide to trade this break and retest strategy is down to you. I'm a very, very, very conservative trader. I use 10 to 15 pip stop losses. Other people use bigger. Whatever you're comfortable doing, do. I go break even as soon as I believe price is going to turn on me, because I get scared. Okay? I'm happy to take break even trades every single day of the month and win 1 trade. Why? Because my winning trade is not going to be making up for my losses. It will be profitable. Now, if I'm trading with 100,000, 500,000 or £1 million, 1 profitable trade at whatever percent I decide to trade is obviously relative to me. Okay? So you guys need to understand that how you trade is personal to you. You guys will look at the bonus video later on in the week, if you've not already looked at it, and you'll start to identify how you break down your account balance. With regards to end trades, you're also going to see how you can enter the market in such a spectacular way that it's just going to literally change the way you trade. Okay? Based on the fact that we're using 4-hour time frame as our analysis, we're sticking to our key levels, and all we're waiting for is for price to find momentum. Okay? Once price finds momentum, then all we're waiting for is for price to go in the direction we expect it to go in. Now, this is not us being stupid and saying that we're going to continuously sell into a buyer-bias market, but as long as we're in a sell-bias market, we're just looking for sells. Now, what happens is the more experienced you become, the more you watch your charts, the more you understand market structure and its behavior, including the pair that you're trading, you will either learn to get into that pair at the best time or at the worst time. But you have to take the good with the bad. If you enter at the worst time, then you have to have your wits about you, which means you have to control your emotions and your psychology. And that means you don't then revenge trade and take buys because you lost your sell. You just wait for what? What are you waiting?
Retest.
No. Yeah, okay, of course a retest, but we're at this level now, Kath. So just say we're at this level now. We have our retest. Say we enter the market, but we don't get in at the best possible opportunity. We're now waiting for what? Patrick, take care, bro. What are we waiting for? Just keep it very simple. If we lose a trade based on a retest of market structure, we are simply just waiting for what? Another opportunity to get into the market again. Okay? Thing is, because we don't have enough power to move the market, just because we sell here, it doesn't mean it has to go down. We know, based on what we've been learning this week, that if price has not got enough liquidity to push down, it will pull back.
Yeah.
And it will pull back to grab stop losses and liquidity to continue pushing down. So if we miss our opportunity and price starts to reverse on us, save yourself. Go into break even, take 3 pips profit. Whoop-de-doo. Patiently wait for another opportunity, or as in this instance, like Jason did today, wait for price to indicate that momentum is strong, creating new support levels based on a sell bias market, and then simply wait for the break. Does this make sense?
Yeah.
Okay. Does anybody need me to clear up or clarify anything we've been speaking about? Oh my God, are you for real? Wow. This takes the biscuit. Wow. I took this sell. It's unbelievable. And look at it. Beautiful. Now, let me illustrate this to you, okay? Because this is a trade that I took. Now, based on the patterns that you lot know, okay, we can see price was pushing down for a long period of time, okay? This is what I identified. Price started to push up, which broke this trend line, and then found a support level. And then price came back for a perfect double bottom and then started to push up, okay? Now, what I started to notice with this pair is that the pair started to fizzle out at this level. Now, again, when I explain to you guys that price does not do this all the time, okay, push up and then automatically start to reverse. But when you start to see these patterns, what you have to do is break them down in the smallest way possible, okay? So then I started to look at this structure level here, okay? And then I saw that price was pushing up. Excuse me. What am I using here to draw this? Okay, yeah. Price was pushing up. And then what do we notice with this pattern? What do you notice with this, guys?
Broke the trend line.
Broke the trend line.
And then formed the area, a support area there.
Is it support?
Resistance.
Resistance. Yeah. Price. Oh, no. You know what, Jason? I hear what you're saying. Yeah.
Yeah.
I hear what you're saying. This level
Yeah.
here, right? Support.
Yeah.
Yeah. Price started to form an area of support. Everybody noticed this.
Yeah.
And then I looked to take my sell at this level, but I think I kind of missed this sell opportunity at this level. So dropping down to the lower time frames, I think I got in elsewhere. But can everybody see what we're looking at here? A strong push to the upside, lots of green candles. Price then attempted to push the downside. We have lots of rejection wicks. We can see this, right? This has now become a new form of support. All we're waiting for price to do is break the support and come back to this level of resistance. Once price comes back to this level of resistance, what are we looking for?
Rejection.
Yeah, and sell opportunity. So we're now in a sell bias market. If we're having a cup of tea or making a coffee like most of us do on our live sessions and miss the trade opportunity, then, and we miss this trade, what are we simply waiting for price to do?
Retest.
We've had the retest. What are we now waiting for price to do?
To pause again to break another area.
There you go. So we have a support level here and we just wait for price to break this level. Okay. Now, I can't believe that price has done this, to be honest with you, but it makes sense from a technical level. I just want to have a look at this in just a tiny bit more detail to see what's happened here. This is what happens when you have commitments. You miss great trades. So this was this. And then, yeah, that will do for me. So this is my market structure. This is how I'm looking at this market structure, okay? Forget all these red candles. This is how I'm looking at this market structure up to this point. Everybody follow me at this moment in time.
Yeah.
Yeah.
So then I drop down to, let me be honest, I'll drop down to my 1 hour time frame. And now this is how I'm seeing the market. I'm not changing anything here, okay? This is my 4 hour line. This is my 4 hour support. So I can see prices holding. Now price is holding. Am I looking for a buy?
No.
Why?
Because you have a sell bias.
Sell bias, exactly. So even if my sell bias is wrong and this goes up, did the market beat me? No. I beat the market because I wasn't too bright to jump into a buy. Because you know what happens if I bought this market? What would have happened? The market would have dropped. Okay? So I'm sticking to my bias. Trend line up, 4 hours been broken. Now I'm simply just waiting for price to break and find a retest level. So I'm sell biased at this moment in time. So now I see price support at this level. This is based on the 4 hour time frame, not the 1 hour. All I'm now waiting for is for price to break the structure level and come back and find what?
Resistance
Level. Now, I think I missed this. If I'm correct, I'll have to go back to my journal. I missed this entry. I think I missed it for 2 hours, you know, if I'm honest with myself. I'm not sure. I'll recap for you guys later. I missed this entry, okay? But because I was so sell biased on this market and I was waiting for the setup, I think I waited for price. It's on Instagram, man. I should just check it real quick, but I can't bother. So I think I waited for price to pull back into this region here. Now, I know this doesn't look like a lot to you, but if I drop down to the 30-minute, it will look okay. And then I was just simply waiting for price to break the structure and to continue to push down. I think on this trade, I end up getting taken out break even around this level. And when I mean I was taken out break even, I was so violated on another level. It was almost just 1 pip worth of break even, yeah? Even I don't care if it's here or here. Like, whatever happened, I was so violated on this trade. I was taken out like 1 pip and then the market just fell on me. But anyway, that's not the point. I'm not here to cry my sorrows. The point is, you can see how we've drawn our structure on the 4 hour time frame and then price played out. Do we see this?
Yes.
Yeah.
Somebody asked me yesterday, how much of price action do we take? Well, when we first come to this chart, you saw that my chart was drawn like this, right? Okay, did you guys see my chart drawn like this when we first come to it?
Yeah. Mm-hmm.
Yeah. But this was previous price action, and in this instance, this would have been my buying opportunity. When I came back to the chart the next day, and this is all visible to anybody that's new here, you can go to the drive. When I drew this chart out from my analysis, this was my potential trading opportunity, and it happened. Okay, because now I'm just taking this current price action. Why? Because common sense tells me that price action was not able to break this strong trend line to the upside. All these candles were green, and then all of a sudden we had a break of this trend line, and then we found a form of support. So at that support, I was just looking for resistance, and then Bob was your uncle. Okay, everybody get where I'm coming from?
Yeah.
Okay.
Yeah.
So tomorrow I'll be doing the morning analysis, and then we'll jump on about 11:30 before New York session and do the live session if I've not already got into a trade. Tomorrow you'll see how I break down the charts as we have done today, and today's illustration is just to point out to you how we use the 4 hour time frame and we do not alter anything, even if we drop to the 30-minute time frame. And guys, just like, this is actually very sexy. Like if you just keep it real, okay? Like, this line makes no sense to anybody. Look at the charts. Like, this kind of makes no sense. I don't know. This may not make sense because it just looks like it's scattered. It's all over the place. But you guys understand it, right?
Yeah.
Yeah.
And that's all that matters. Okay? That's all that matters. So until the 4-hour time frame tells us that it's broken, come back and not able to break again and continue to push up, then that's only when we change our bias. Until then, as long as we're in a sell bias market, we're looking for sells. You can look for a sell here, a sell of this break, a sell of this break, a retest of this level, a sell of this break, a retest of this level. Whatever you guys decide to do while you're in a sell bias market is up to you. But the more you practice what you're doing, the better you will become in finding those opportunities to enter the market. Does this make sense?
Yeah.
Yes.
And this is just based on 4-hour time frame only. Okay? So I hope you find it useful going over some of these charts. Anybody that calls me out on this and says to me, well, this has happened again, please look at my live videos, okay? My live trading sessions and my daily analysis. I'm very transparent in what I'm doing. And the reason why is because I don't care if I say I'm in a sell bias market and the market goes up. Because guess what? I'm not taking a sell while the market's going up. So I've lost nothing. What do I do? I go to another chart. I look for another trade. If my bias is not right and it goes the other way, I don't care. I go to another chart. And 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 if I end up exhausting every single chart that I have here, then guess what? What happens? If I
You just wait.
I just don't trade.
Mm-hmm.
Yeah? And the thing is, what's happened with Instagram, social media, and all the hype around Forex, everybody believes they need to trade every day and make 5%. Well, if you're making 5% a day, that's 100% a month. Go and find yourself a bank to work for. Okay? I'm not saying it's not possible, but just keep it realistic. If you invest your money into a bank, the return's going to be 3 to 5% a year. Is that correct? Or a month? I don't care. Whatever it is. If you guys are making 10, 15, 20% a week, it's mahoosive. I promise you one thing. If you take £100 and you consistently turn that around to 15, 20% a month for 6 months with good risk reward ratio and a positive equity curve, and you go to an investor and say, do you know what? These are my returns on £100, $100, €100 account. I would like for you to invest in me. If you can positively show consistent return and a positive equity curve, that investor will invest in you, or at least one of them will. It's not about how much you trade with, it's how you're turning your returns around. Does this make sense?
Yeah.
Yeah. Mm-hmm.
Try and stay away from the monetary value, okay, and stick to the process. And once you can stick to the process, then everything becomes a lot easier. Unfortunately, as big adults as we are, as soon as we have a buck or two in our account, we just feel so trigger happy that we feel we need to get into a trade as soon as we think there's a trading opportunity. And then when you lose that trade, you feel like a mug because you've gone from that childlike mentality and attitude of I need to trade, to losing that trade, to then feeling like you're a big adult again and proving yourself that you know you can trade and that you wasn't wrong and that you're going to get it right. Okay? You really want to try and eliminate this mindset and just wait for the 4-hour time frame to give you clear and concise trading opportunities. And this is all you are simply waiting for. Okay? In this instance, if you wait patiently, price pushed up, gave us a kind of head and shoulders pattern. This was your first indication, price came back, and you look for a sell. Remember, and I keep stressing this, these are 4-hour candles. You will have to wait some time, but just patiently wait and these opportunities will come. Does this make sense?
Yeah.
Very good. So I hope you guys kind of like understood what I was trying to help you guys to see today, the advantages of using your 4 hour time frame and dropping down analysis. We've been on this a bit too long again. I don't know what's happening with my teaching this week, but there you go. So what we're going to do tomorrow is we're going to go straight into learning how to enter the market. This is probably the most simplest thing that you're ever going to learn. And if you really like it, you're not going to share it with anybody because you just want to keep it to yourself, okay? So let's tune back in tomorrow. Again, tomorrow I'm going to be back on the charts. Sorry for my absence today, but you know what?
Created with free version for non-commercial use.